The NBA luxury tax is a financial penalty designed to balance the playing field between high-spending teams and those with smaller budgets. At its core, this tax is a surcharge that teams must pay to the league when their total payroll exceeds a specific threshold. Teams are allowed to spend over the salary cap to retain their own players, but doing so heavily triggers these additional costs. The system uses a tiered structure. The more a team exceeds the limit, the more they pay per dollar, especially if they are repeat offenders. Unlike some leagues with a hard cap that stops spending entirely, the NBA allows teams to pay a premium to build larger rosters. As your payroll climbs into higher tiers, the tax rate scales up significantly, making it very expensive to maintain a deep roster. Ultimately, teams view this tax as a business expense. If winning an NBA title generates enough revenue, the tax is considered a worthy investment. Understanding these financial rules helps explain why some teams trade players to save money. Thanks for learning with us today.